Hi, this is Drew Wagner. I'm Andrea's dad. Julie, my wife, had asked that I show you how to set up a game on the virtual stock exchange. So first you go to marketwatch.com/game and you have to sign, you need to register. You fill out these fields. You have to fill out all of the fields, give it your email address, and then click register now. Then they send you a confirmation email. You, once you've confirmed your account, then you can sign in. Uh, with your email address and a password that you select. It should let me sign in now. And yeah, I've got one. I've used this with various email. I have a game playing, but you click on create a game to create a new one. And I always click advanced because there's some things uh, under the advanced setting that I think most people should know. You give it a name and start time. Like it could start say on Monday and end a week later or whenever you want it to end. You can give it a tagline, but you don't have to. And I generally select yes, new players can join after the game has started, but you can do it however you want. Because I always get people who are like, for whatever reason, start late. Oh, so I have to pick a different, I guess you have to choose a name that's not already in use. So next Eagle, go Eagles, that works. Okay, symbol restrictions, I just use all. You want to be able to trade ETFs, that's my favorite, or exchange traded funds. They work like, they're like closed-end mutual funds, or they're kind of like closed-end mutual funds. Uh, I make it private and give it a password. That way you just have the students that are in your class participating. Okay, so, but then I hit public, and the oranges means highlighted or selected. Public for player portfolios because you really need to make it public because you're one of the players as a teacher. You don't really, I don't know how to make it otherwise, but you don't see anything that the other students don't see. So in order to grade their activity, you need to be able to see their transactions, and the only way you can do that is to make their portfolio public. So make sure it's public. And private is just so it's only your students that are in the game, not somebody else. And public portfolio means you can see what their transactions are, which is kind of necessary if you're going to give kind of any kind of a grade on this. Starting bets or starting bets. Balances is by default 100,000. I actually like to make this 1 million, just to add an extra zero there. Uh, Although that makes the commission almost negligible, so that students might be tempted to make all kinds of trades, but it's time consuming, so I kind of doubt they would do that. I'll leave the rest of these price limitations, $2 minimum. That means you can't buy or sell a stock that has a stock price less than $2. Maximum 500,000. Someone might want to buy Berkshire Hathaway, which has a stock price that's over $100,000. I don't know what it is right now, but I know it's in six figures. So that's the most expensive stock I know of. The default's high enough. Trading volume limitation. This means, well, you can read that, but this makes it so that a student can't buy more than 1% of the total volume of trade of that stock. So again, it kind of limits which stocks your students can buy. You can increase this to say 10% if you want, or something, or whatever you want it to be. Go to next, and it gives you an overview, and you can I forgot these things on the right. I'm sorry, I'm going back. You probably do want to enable short selling, margin selling, and limit orders and stop loss orders. Not so much partial shares because they don't exist in reality, but the rest of those things do. And I think limit orders are kind of important, especially since the bid-ask spread on stocks is determined by the limit book that specialists keep. That is the bid price that is the price at which you would sell to the dealer, is the highest limit sell order that they have. I'm sorry, rather limit buy order rather that they have on their books. So that when you go to sell a stock, you're selling to whoever has the highest limit buy order on the dealer's book order books. And when you go to buy a stock, you're buying at the ask, which is the lowest limit sell order on the specialist or dealer's limit book. So the limit book is limit order is actually kind of define where the bid-ask spread comes from, and I think that's kind of neat to know about. So and also students like limit orders and stop orders are more used more for like insurance. If you're already up $5 per share, you can put a stop loss like sell order, say just below the current market price. So if the price does go down, it'll automatically close your position and take so that you take the profit. But if it continues to go up, the order isn't filled and you continue to make more, get more gain. So it's a way of limiting your losses without sacrificing potential gains. And stop buys are typically used to in the same way, but in reverse, because if like say you have a short sale on a stock and you've already made some money, you can put a stop buy to cover the short at just at a stop price just above the current the current market price. So I mean, students are going to be tempted to just use the market orders because it's simpler, but I find limit orders are very useful, I think. I mean, if you're a real trader, I mean, or if you're like just shopping and you might be in the mall and you like this pair of jeans and they're costing $50 and you think that's kind of steep. If you could just leave a standing order with the cashier at the store at the Gap or whatever and say, I'll buy these jeans when the price falls down to $40 per jeans, and that would be a limit order. It buys automatically when the price falls to your limit price. And of course, a limit sell would sell automatically when the price rises to your limit sell price. At any rate, so I would include the limits and stops. Then you just create the game. This is not going to have any traders, but of course now you can go ahead and join the game. And what was the it was Eagles, right? EAGLES was my password. Not very inventive. Now you can just go in and the stock market is closed right now. It's 2 o'clock, as you can see up here, and the market is open from 6:30 a.m. to Pacific time, 6:30 a.m. to 1 o'clock p.m. Pacific time. That would be 9:30 a.m. to 4 p.m. Wall Street time, New York City time. So, but you can still submit orders. You click on trading. You can look at what they have there. These are some of the most active stocks of this trading day. Not surprising, Alibaba right up top. You can select some of those. Click the trade in the corner. Everybody loves Google, right? Except I think $520 is really pricey for that stock. Or you could research the company. I usually open up my research in a new window so I can go back to where I was. But and it gives you a summary with PE ratio, which is probably the first thing most people look at. Price that is price to earnings per share. That tells you how expensive something is per dollar of earnings per share. And high growth stocks tend to have high PE ratios, and industrial stocks tend to have low PE ratios. And of course, you can play with this, or you can just look at their their financial statements. You have income statements is the default. You have balance sheets and cash flow statements. Or you can go to a lot of people just like to look at charts. So you can play with these charts, and you can narrow it down to 10 days instead of a whole year, and change the frequency to as high or low as you want, and do your research that way. Also, the volume is pretty key. It tends to be when something is kind of floating around with very low volume, that's kind of an unstable price, especially when it's at a high. A high price with low volume indicates it's probably coming back down. At any rate, there's lots of theories on that. So I'm just going to close this window. Or you can enter your own. Say you like, I don't know, automated, what's AMD? It's a chip maker. It's not. It's in competition with IBM's. So you can, or maybe you like, I don't know, what's another company that you know of? Microsoft. Okay, MSFT. Fine, that's also there. So you can type in a ticker symbol there, search for it, and you want to trade it, then you would just go in here and you can trade it. If I just buy some of it now, say you can drag this thing across to determine the number of shares, or you can type in some number of shares. 5,000 shares is really only a quarter of your portfolio, and you can buy on margin, which means you only need 50% equity. If with $1 million, I could buy $2 million worth of stock, or I could short sell $2 million worth of stock. The short side also has a 50% margin requirement, so it's kind of symmetric in that way. So you can drag, or you can type in the amount. You can make it a market order, which during trading hours would go through immediately, or you could make it a limit order. Let's say $48.42 is too expensive, but I would like to buy it at $47.50. Type in 47.5, submit order, and now your buy order will not go through. If you click on portfolio here, you can see your orders. You see you have a buy order now at 47.5, so that will not actually execute and become a transaction until the price falls to 47.5. Nothing's going to go through right now anyway because it's after hours. But anyway, so trading, you've got your limits and your stops. Alibaba's a brand new company. You can also short sell, right? So you click on trade and sell short. What selling short does is, it's technically what you're doing is you're borrowing the stock with the intention of buying it back later at a different price, or whatever the future price is. So it pays off if the stock price goes down. So you're betting that basically it's by short selling something, you're betting that the price is going down. At any rate, it's something to play with. People can, of course, Google the terms to find out what they mean. I don't think I need to really explain everything at this point. So I hope that gets you started. If you have any questions, please feel free to contact me by email or let Julie know. Thanks.